Hello, everyone. I'm Bobby Howe, the 2020 chair of the Missouri Realtors Strategic Planning Committee. Joining me throughout the program will be my vice chair, Jennifer Piglowski. Hey, Jennifer.
Hi, Bobby.
It was the Strategic Planning Committee that recommended we implement this valuable forum, and we are so happy that we did. We believe we have a very exciting lineup for you today. The forum is always devoted to the issues of the day that seem to be the most pressing for all of us. And it seems like we have some really pressing issues right now. The majority of our program today is focused on SBA loans, but our first speaker will be an expert on unemployment insurance. Throughout the program, we will also highlight responses from our recent flash survey that was sent to you, where we asked you about the state of the market. In fact, let's go ahead and begin with the responses from the first question. We had both a commercial and residential survey, and the first question was fairly similar on both. So from the first residential survey, question number 1 said, how has the coronavirus COVID-19 affected home buyer interest in your market? With over 600 responses, we see that over 80% of our members say that their business has decreased or significantly decreased. 14% responded that they have seen no change, and 3.5% have seen an increase in business. Jennifer, how about you unveil the results of question number 1 from the commercial survey?
Thanks, Bobby. Question number 1 on the commercial survey was, how much of an impact is the coronavirus having on new commercial clients who want to lease properties? We thought the residential numbers were strong, but our commercial members are telling us that 71% have seen a significant decrease and 18% have seen a decrease in their business. Those are pretty big numbers.
Yes, they are, Jennifer. We will review additional results from the survey throughout the program, but we're anxious to jump right in with our first speaker. Joining us from the National Association of Realtors to talk about independent contractors being able to now apply for unemployment benefits for the first time is Nia Duggins. Nia is the policy representative for business issues with NAR. Nia, thank you so much for joining us today and for all you're doing for realtors around the country. I've loved seeing you on the webinars the last couple of weeks. Nia, the floor is yours.
Thank you, Jennifer, as well as Bobby and also John. And thank you all for joining today to learn more about unemployment in the midst really of this pandemic. I know that these are challenging times for us all, but we will get through it. And I do hope that you are staying safe and well during this time, you and your families. So I'm going to talk a little bit today about pandemic unemployment assistance. And this was created under the CARES Act. So give me 1 second and I will share my screen with you all. Okay, so I'm going to talk about, again, the Pandemic Unemployment Assistance Program, which was created under the CARES Act. And prior to digging really deep into the PUA program, I'm going to talk about and give a brief overview of what the CARES Act essentially did and what is included in the stimulus bill. So before I get into that, here are some resources that I definitely would encourage that you check out if you have not gone to nar.realtor/coronavirus FAQ, as well as nar.realtor/CARES Act. And we also have a special link, nar.realtor coronavirus unemployment is UE is the acronym, but unemployment benefits is the acronym that we're using. So definitely check those websites out. You can also text COVID-19 to 30644 for up-to-the-date updates as well as information. We are continuing to update the material and information that we have as we receive it in real time. We are updating pretty consistently and regularly to the nar.realtor website, so please check it out. So essentially, the CARES Act was one of the largest, it is the largest bill in history and relief package that we have seen in American history. It offers over $2 trillion in relief to healthcare workers, to business owners, and there are key provisions within it specifically for independent contractors and the self-employed. This was significant for NAR to advocate for because many of the bills that Congress was working on in creating stimulus bills excluded independent contractors and self-employed individuals. And we understand that independent contractors and small business owners add tremendously to the US economy. And so they could not be excluded in any type of stimulus relief. And so this is what NAR advocated for. Again, the CARES Act, specifically, we advocated to ensure that small businesses and businesses of many sizes were included in this particular bill. So what are the major provisions within the CARES Act? So you've been hearing, I'm sure, a lot about the PPP program, or the Paycheck Protection Program, which is a new SBA loan program that is designed for small businesses of every size, but it includes small businesses and independent contractors as well, who are eligible to receive loans to assist with finances during this time to keep businesses afloat. The CARES Act also expanded economic injury disaster loans, which was already a program under the SBA, but it did not, the program did not provide for independent contractors and small business owners. And so the CARES Act expanded access as to who could apply and also receive money under the economic injury disaster loans. The CARES Act also provides stimulus checks that will be and have been issued from the IRS to single filers. The amount is $1,200 if you make less than $75,000 a year, and for joint filers, it's less than $150,000 a year, and you're entitled to $2,400. And then there's additional support in those stimulus relief checks for minor dependents that are under the age of 17. So those are some additional financial supports that the government has put in place to help families during this time. Additionally, the stimulus bill allows for retirement withdrawals for individuals up to $100,000 penalty-free, and they can be repaid over a 3-year period. So it gives you somewhat of a grace period if necessary to withdraw funds from your retirement. So this is the topic of discussion, the Pandemic Unemployment Assistance Program. This is a newly created federal program that provides benefits, unemployment benefits, to independent contractors and the self-employed. This program was, again, created under the CARES Act, specifically designed to individuals who traditionally have not been eligible for unemployment assistance. The program is fully funded by the federal government and fully administered by states. So what does that mean? The federal government gives states money to then issue these benefits to independent contractors, self-employed individuals, as well as gig workers are included within this provision under the CARES Act. In order for states to be able to issue these benefits, however, states must affirmatively opt into the program by entering into an agreement with the U.S. Department of Labor. So many of the states have already signed agreements with the U.S. Department of Labor. Some of them have been dragging their feet on it, but we expect all states, for the most part, to participate in this program because they're incentivized to. The states really do not have any financial obligation other than to submit accounting in order to receive money for this particular program. One of the things we've been receiving questions about is whether folks can find out what states are participating. I don't have a full list of states, but I can say that Missouri apparently has signed a contract and will be again accepting applications and has already started, according to the website, really this week to accept those benefits. And the agency in Missouri that's responsible is the Missouri Department of Labor and Industrial Relations. Issues those benefits, and that's where you would go to apply for the PUA benefits that are available. I will say also that on April 5th, rather, DOL issued a lot of guidance to states regarding the PUA program. And so we have been receiving a lot of questions as to whether individuals must first apply for regular unemployment, then be deemed ineligible for regular unemployment, and then subsequently apply for the PUA benefits. States are not mandated to do that. However, there has been a challenge in terms of implementation of this new program. The DOL guidance suggests that individuals or states rather, the state labor agencies are supposed to make a determination regarding an individual's eligibility for regular benefits and document it. But many states don't know how to do that analysis, a streamlined analysis of who's eligible for regular benefits without having folks apply first. So that is where it's really like it is an implementation challenge. The DOL is aware of this challenge. Also, I will say in Missouri, pursuant to what is required under the law there and how your state is implementing it, you would have to first apply for regular unemployment, be denied, and then they will make an assessment regarding PUA. So hopefully states will begin to make the necessary change. I know New York started the same way as Missouri, having folks to first apply for regular unemployment, and then they figured out a way to streamline it so that folks did not have to do that. So as the program progresses, hopefully you won't have to apply first. But as of today, you do have to apply first for a regular unemployment and then be denied. So pandemic unemployment eligibility. The program, as I mentioned, is available for individuals whose work has been impacted either partially or fully as a result of the COVID-19 public health emergency. It provides up to 39 weeks of assistance from the time that essentially unemployment started for you as an individual through December 31st of this year. So any weeks where you have either been unable to work or only partially able to work, you're able to apply for unemployment. And those benefits are retroactive. So for example, if you, like within the past 2 weeks, have been unable to work, you can then, when you have been deemed eligible by the state, you can then receive retroactive benefits for those weeks of unemployment. Real estate professionals, as I mentioned, including realtors, are eligible to apply for and receive under these benefits. The states base the compensation amounts that you receive under unemployment on all net income from self-employment that you've earned. So again, it's based on all self-employment really income that you've earned. And so they'll look at previous tax returns, they will look at business licenses and a few other verification documents in making this determination. Once you have been deemed eligible to receive benefits, the federal government is giving an additional $600 per week through July 31st. So once the state makes a determination, you are eligible to receive PUA, either fully or partially, then you'll then receive an additional $600 per week that is added on through July 31st of this year. What happens in terms of who's ineligible? So this is a huge question that we receive a lot of the time. Individuals who can telework with pay. And so telework with pay under DOL guidance suggests that you can work a normal work week for the same number of hours that you would pre-pandemic. So if you're able to work, for example, a 40-hour work week, and you're able to close transactions in the same manner, then you wouldn't be eligible. However, for many realtors, that's not the case. Many are able to partially telework, so then that means you would still be eligible to apply for PUA benefits and could collect benefits under this program. Another question that we've received is whether folks can apply and receive under PUA as well as under the Paycheck Protection Program or the EIDL, which are the SBA loan programs. And the answer to that is yes. The legislation does not speak to any coordination between the programs or restrict you in any way. However, if you are receiving income, whether it be from commissions or from an SBA loan, I will say that your unemployment benefits may be offset by whatever amount in income you receive. So, for example, you've been deemed eligible by the state to receive PUA. One of the mandates that's required is that each week that you're receiving PUA, you will have to file a weekly claim to advise the state of any income that you may have received. And so maybe last week you didn't receive anything, but maybe next week or this week you receive a PUA loan. When you go to file your weekly claim with the state, you would have to essentially report that income, and then your PUA would be offset by that amount. It does not mean that you can't receive both. It just means that the PUA benefits may be reduced and offset from other income. Again, to find out more about your eligibility, definitely check with the Missouri Department of Labor and Industrial Relations. What is needed in order to verify income for self-employed individuals? This is another major question that we've received. DOL guidance doesn't give a whole lot to states in terms of what they should look for or look to. However, prior tax returns, bank statements, profit and loss statements, business licenses, and other business records to help verify income are all useful. And during this time, more than likely, many states will ask you to probably upload those documents and get them to them. We did receive also another question about whether you should allow your real estate license to retire or you should allow it to be inactive while you're collecting the unemployment benefits. And the answer to that is no. Ideally, the states want you to be able to continue to work to the extent that you can. So you should not do that. And also, it may become also an administrative burden on your end to try to undo a lot of that should you go that way to allow your license to be deemed inactive. So please don't do that. Continue to allow your license to remain active even while you're collecting pandemic unemployment assistance, because you can do that. Another question we've received also that I'll highlight is if your state has deemed real estate services as essential, does that mean that you're also ineligible to receive unemployment assistance? And the answer to that is no. Just because the state has deemed an industry as essential doesn't mean that you can work, and surely you cannot work to the same extent for many individuals that you were working. So I will say, just take that into consideration. Definitely apply for these benefits in Missouri and check their websites. They have updated as well FAQs on the Pandemic Unemployment Assistance Program as well as the CARES Act. So check those out. And then I have a few resources here. Of course, NAR's resources. The U.S. Department of Labor also has a website. And then I've included websites for the Missouri Department of Labor and Industrial Relations. So check out those websites. And I will now turn it back over to Bobby.
All right.
It's actually Jennifer. But thank you so much, Nia. As Bobby said in her introduction, we really, really appreciate everything that you and all of your NAR colleagues are doing for us right now. I do want to point out that the Missouri Realtors staff is updating the unemployment benefits section of the coronavirus resources pages at our state association website whenever they have new information from the Missouri Department of Labor. I think it's time for a few more results of that flash survey. So let's go to question number 2 from both surveys. Question 2 of the residential survey is, how has coronavirus affected the number of homes on the market? The largest section here is decreased at nearly 59% experiencing a decrease. But if you add significantly decreased, we get to a total of 85% experiencing a decrease of the homes on the market. And we already had a tight inventory going into this. Now, if we switch to commercial, the second question was, how much of an impact is the coronavirus having on new commercial clients who want to purchase properties? If we add the green bar at 56.5% experiencing a significant decline to the blue bar of 30% decline, that gives us a whopping 86.5% seeing a decline in clients looking to purchase commercial properties.
Wow, those are some big numbers, Jennifer. Switching gears, we're going to move into the very big issue of small business administration loans and grants. We have 4 speakers to give us some incredible insider information. First, we have 3 Missouri-based experts, and then we're going to finish up with a final speaker from Washington, D.C. On our panel of our 3 Missouri-based experts, we have Heidi Ross and Amy Watson from Girding, Corte, and Chitwood CPAs in Columbia. And we also have Jamie Palmer from Central Bank. This panel is going to focus on the PPP and EIDL loans. They will give us an overview of eligibility and what expenses count for the forgivable piece. And they'll cover best practices for recording, reporting, and tracking the usage of funds to make the certification of eligible expenses as easy as possible. And we'll hear more about the application process, information needed to apply, and items that are causing applications to be rejected. It's my pleasure to welcome our panel, Heidi, Amy, and Jamie. Take it away, ladies.
Measures in the CARES Act, including specifically the EIDL and the PPP loans. We really appreciate that opportunity, not for the purpose of providing any kind of individual or tax advice. Our intent really is more to provide a general overview of these programs and pieces that may be relevant to you wherever you are. If I'm sure many of you have heard of these programs somewhere, they've been talked about a lot, but maybe you've applied for them. Maybe you're thinking about, is this the right fit for me? Maybe you've gone through the process and already gotten the funds and are looking on the other side of that. So we're hoping to provide some information and insights all along that process. Primarily today, we will focus on the Paycheck Protection Program. I'll touch a little less on the EIDL, and that's the Economic Injury Disaster Loans. And then a couple of other options I just wanted to bring up that to make you aware of that are part of the CARES Act include an SBA debt relief program. So if you already have an SBA loan, you can speak with your SBA lender about that. It provides, they will cover payments for 6 months on those loans for you. And there's also payroll tax credits and payroll tax deferrals available to where you could put off the payments of those quarterly 941s or your self-employment tax to even the end of 2022. So those are some other options besides the loan route. There are conflicts with the payroll protection program and those tax credits. You can't do both. It's an either or situation. But as Nia mentioned, the Economic Injury Disaster Loan Program has been around for a while. It's historically used in natural disasters, if there have been tornadoes or earthquakes, things like that. You can, under this program, qualify for up to $2 million loan with interest rates of 3.75% for small business and 2.75% for nonprofits. There's a 1-year payment deferral on those loans, meaning you can not pay for the first year, and you have up to a 30-year maturity depending on loan amount and the terms you work out with your with the SBA. Under that program, there's also what's the emergency grant, which is the intent to get funds out quickly. And that is up to $10,000 that if you apply for and are awarded that grant, you don't have to repay that. That is funds from the SBA that are granted to you. The $10,000 is a maximum amount. It's actually based on per employee. So, and that's $1,000 per employee up to 10. And so you'd have, 2 employees, you get $2,000. If you're self-employed, you're a realtor, you may only qualify for $1,000 under that grant, but it's still $1,000 that wouldn't need to be repaid, that could maybe supplement some of other income from somewhere. The EIDL can be applied for either through an SBA lender. You can work with your bank, or that's one you can actually apply for directly through the SBA. If you go to their website at sba.gov, there's quite a bit of information on that site regarding the EIDL. Now, getting back to the PPP, which is the bigger part of this CARES Act and the new loan program that's being administered by the SBA. As I mentioned, we've structured our presentation to kind of go through various phases of the PPP loan process. Hopefully you'll take something out of some piece of it. I'm going to start with what is it? It's administered through the SBA, was authorized under the CARES Act. It's generated a lot of interest because of the really favorable terms. It is a loan with a 2-year maturity and a 6-month payment deferral, and the interest rate's 1%. So you're not likely to get that kind of interest rate anywhere else. And the big kicker comes in with, there's a possibility, in fact, if you use the funds correctly, it's a forgivable loan, meaning you get these funds, they don't need to be repaid as long as you've used them for the purposes that they're authorized to be used for. So that's a very attractive prospect for many people. Let's see.
Heidi, I might just interject there on the forgiveness piece. I think that is an incredibly attractive piece, and that will be based on an application approximately 8 weeks after receiving those loan proceeds, and documentation would be needed for that. I can talk a little more, but I want to make sure that people do think of it as a loan with a potential for forgiveness,
Yes.
and that forgiveness is evaluated at a point in the future via kind of another application process.
Correct. And that was the next section on my notes was going to be exactly that was what you'd have to do. So perfect. That was perfect timing and segue there into, as you mentioned, there's an 8-week time frame. Once you've applied for these loan funds, they're deposited, and for the next 8 weeks, you have to keep your employees and payroll at the same level they were pre disaster or pre-receipt of the funds. Those funds have to be used for payroll, at least 75% of them. 25% can be used for other expenses that are very limited. It's utilities, rent, interest on a mortgage payment. Then you'll go through that second process, which Amy's going to talk more about what records you need to keep. The second piece of exactly how the forgiveness application works, they're still working on guidance for that. The federal government has included in the act that this is not taxable. So if the loan is forgiven, it's not taxable as loan forgiveness. States may differ on that. I have not seen anything out of Missouri one way or another. I'm sure that guidance will be forthcoming later on in the year, as it will with the specific process to be forgiven. To be eligible for these funds, you have to be a small business with 500 or fewer employees. You can be an independent contractor or someone with self-employment income. So I know many realtors are structured as either S corporations or Schedule C filers. Either one of those could be eligible for this PPP loan. Independent contractors, they would need your current year Schedule C. For the for the S corporation or someone with employees, or even a Schedule C with employees, they're going to want your quarterly 941s to look at to make that determination for how much loan you can get. And the loan amount is based on 2.5 times your average monthly payroll. So that payroll is either your net self-employment income or the gross wages and benefits, including health insurance and retirement that you're paying out to your employees. This type of SBA loan has to be applied for through an approved SBA lender. I know there's many community banks and larger banks that are approved SBA lenders. You might reach out to someone you're comfortable working with, see if they have that designation or if they can point you in the direction if you think this is a program that you want to explore further. I will say this program was announced and the bill was signed by the president March 27th to enact the CARES Act, which put the PPP loan program into place. Applications first opened April 3rd, and by last Thursday, which was April 16th, I believe. Yeah, April 16th, there were no more funds available in the program. They announced Thursday morning. And then since that time, and let me back up, that was for either that program or the Economic Injury Disaster Loan Program. They were not accepting any more applications at the SBA. Congress has been working to get more funds into these programs. The Senate actually passed a bill on Tuesday. It's supposed to be up in the House this afternoon for vote. So we should find out here very shortly what that looks like going forward. They're pretty confident that that's going to pass. The Senate version of this bill includes an additional $310 billion in payroll protection program loan funds, an additional $60 billion in the EIDL loan funds. Now, the first round of funding was $349 billion in payroll protection plan. So it's close, not quite, but close to as much money. The thought, though, is that that money is going to go even faster because banks have applications already in for people anticipating that they need to get in fast, or they got their application right in at the tail end of the last round of funding. So if this is a program that you're considering, I think I could do this. There are no income limitations. It's not like, oh, my income has to drop or it has to drop this much. It's based purely on, are you maintaining the same level of payroll employees? So if this is something that is interesting to you, I'd encourage you to reach out to your lender as soon as you can. Get your information together, start collecting what you need to make that application.
I would say, Heidi, we're hearing, though, of course, it still has to go through and get to Trump's office for signing, but we're hearing as early as Friday morning, the SBA may have that Paycheck Protection Program window back open. So you were very right that time would be of the essence.
Absolutely. Then I think that was kind of the broad overview of those programs that I thought were the highlights most important to someone exploring the process. Amy is now going to talk with us a little bit more about what kind of records you need to be keeping, what that forgiveness program looks like at this point. And so Amy, I'll let you take it from here.
Okay, thank you, Heidi. So Heidi touched on the PPP program and eligibility requirements. So let's take a step forward and assume you've applied for the PPP, you've been approved, and you're going to be receiving these funds. So what do you need to do? The first decision you need to make is what bank account are you going to put these funds into? Some financial institutions are recommending you create an entirely new bank account just so you can easily track how you've expended these funds. Now, that's definitely not required, but it may be what's easiest for you. I spoke with Jamie last week, and she had a great recommendation that if you already have a separate account for your payroll, it might be most meaningful and helpful to put it into that account. Because such a large portion, 75%, must be used for payroll to be forgiven, you're already recording your payroll expenses out of that account. So it may be most helpful and easiest to go ahead and deposit the funds into that account. If you don't want to do a separate account, you don't have to. You can put your funds in your general checking account. Or if you do choose to do a separate account, but you want to reimburse or pay expenses outside of payroll, you can transfer the funds from one checking account to the other to reimburse that other checking account that may have paid your mortgage interest or your utility expenses. So there's no rule on this. It's just whatever's easiest for you and what would make your record keeping the easiest. So let's assume you've got your funds, you've determined your bank account. How are you going to put those on your financial statements? Two of the most common methods we're seeing is, one, some of our clients are reporting it as other income. I highly, highly recommend that you separate it out from any of your other income sources. This will make it much easier when tax season rolls around next year and your tax preparer is preparing your tax return. As Heidi mentioned, the forgiven piece of this loan is not going to be taxed at the federal level. We're still waiting to see what the states will do, including Missouri. We don't have a firm ruling on that as of yet. But if you keep it separately reported on your financial statements, it'll make that process easier. The other option is you can leave it as a liability on your balance sheet. And then as you go through the forgiveness process, whatever piece of the loan is forgiven, you would then move over to your income statement as other income. Or if there's a portion that you're going to be repaying, you simply leave it on your balance sheet as any other note payable and just pay down that balance. As far as expenses, what expenses are eligible? Payroll in this act has been described or explained as salary, wages, and commissions. It is capped at $100,000 per employee. And if you pay independent contractors through your business, those are not considered employees for PPP funds. Benefits such as PTO, sick leave, family leave, health insurance premiums, retirement benefits, those are all eligible expenses to be used for PPP funds. Some state and local assessed taxes on compensation will be allowed to be paid with PPP funds. It's important to remember not all payroll taxes are eligible to be paid with PPP funds. So you'll want to be sure that you have a true understanding of what is eligible and what's not as far as payroll taxes go. Schedule C filers, your wages, commissions, income, and net earnings from self-employment will be eligible as well. So what's the best way to track these so that when it comes time for loan forgiveness, you have a smooth process to provide the bank with that information? If you're using an accounting system, for example, QuickBooks, they have a class feature. It might not be a bad idea to set up a PPP class, and that way all of the inflows and outflows of the PPP dollars will be tracked in that class. And you can run a profit and loss by class and provide that to your lender to show how you use those funds. If you don't have a class feature, you can always create sub-accounts in your payroll section. You could have salaries paid with PPP funds and record those amounts there. That's another option. Or if you want to just use an Excel spreadsheet or a manual ledger, that's completely fine. It really is up to you, whatever's easiest for you. The more work you do on the front end and thinking through this process, the less work you're going to have at the end of it. It's going to make that forgiveness piece go a lot smoother. One of the key things to remember is to retain copies of all of the documentation to support how you're using these PPP funds. I would recommend keeping a separate file, either electronically or a file on your desk, and putting in copies of all of the invoices and all of the receipts to document how you use the PPP funds. That way, when it comes time for that loan forgiveness, you simply provide that file to your lender. They have what they need, rather than you needing to go back through all of your vendor files and pulling the documentation for those expenses. Some examples of documentation I would believe would be needed would be your payroll reports for that 8-week period from the date your funds are deposited for that 8 weeks. All of your payroll reports, your payroll tax filings, health insurance invoices, and retirement contribution statements that you're using the PPP funds for. If you're going to be claiming interest expense, you could provide a loan amortization schedule, your rental agreements, copies of the canceled checks paying your rent to your landlord, and utility bills. Right now, we're still trying to find definitive guidance if cell phones and internet are going to be included as utilities, or if they only mean electricity, water, and gas, things like that. So I don't know, Jamie, have you heard anything more about the specifics of the utilities?
I can tell you in the interim final rules that have been issued, they have not gotten specific. I think different accounting firms may come out with different opinions, but at this point, and until we see it from the interim final rule or issued in an FAQ from the SBA and Treasury, it's gray.
Yeah, that's kind of what the same page we were on too. And then another thing you'll want to keep track of is your FTE, or your full-time equivalent employees. You want to keep track of that FTE head count from the 8-week period as well. If you are going to use PPP funds for mortgage interest, rental payments, or utility payments, you have to remember those documents, those agreements must have been in place as of February 15th, 2020. So if you went and purchased a new commercial building in March and you're financing that with a commercial mortgage, those interest payments will not be eligible for PPP because that mortgage was not in place as of February 15th of 2020. So keep that in mind when you're considering how to spend your PPP dollars. Jamie, another question for you. Do you have a preference if your clients provide you documentation in a paper format or electronic? Does anything help expedite the process on your end?
Well, I think each bank is going to take a different approach there. Certainly in a pandemic situation, an electronic application can be very helpful, but we absolutely have folks showing up at branch drive-throughs to drop papers in there through the window, and we are taking those as well. I think what's important is to understand what the bank asks you for and do it in that way and submit it as completely as possible based on your particular bank's checklist of items that they're going to request, in addition to that standard application form issued by the SBA and Treasury.
Okay. Yeah, I think the key takeaway is document, document, document. You cannot have enough documentation. And as Jamie mentioned, make sure you understand what your bank is going to need from you, because the more complete you provide, the faster the process is going to go and the easier it's going to be on you as well. So the loan forgiveness piece, if you spend 75% of your PPP funds on eligible payroll costs and no more than 25% on the mortgage, rent, and utilities, then it may be forgiven. Schedule C filers, there is a special provision. They call it the owner compensation replacement. And that's kind of your version of payroll cost. And that's calculated a little bit different than the 75% rule. And how that's calculated is they will take your 2019 Schedule C net profit and multiply that by the fraction 8/52. So 8 weeks out of 52 weeks. And that times your net profit will be the owner compensation replacement piece used in the forgiveness calculation. What can limit the forgiveness? First, if you reduce your FTE headcount during that 8-week period, that can reduce the amount that will be forgiven of the loan. If you decrease salaries and wages more than 25% for an employee that made less than $100,000 in 2019, that could also limit the forgiveness amount. But the good news is you do have until June 30th of 2020 to restore your FTE or restore those salary levels back up to what they were prior to February 15th. So if you made changes between February 15th and April 26th, they are allowing you till June 30th to kind of catch back up, get your feet back under you, and get those numbers back up to where they were when you applied for the funds. Something to keep in mind, if you do use the PPP funds for an unauthorized expenditure, you will have to pay them back. If you knowingly misuse the funds, then you will be subject to additional liability, such as charges for fraud. So the key here is just to really understand when you accept these PPP funds, understand what you're accepting and what you're agreeing to and what expenditures you can cover with those PPP funds. Another key thing to remember is to keep the documentation for those expenses separate, because the ruling hasn't really been clear on if the IRS is going to allow you to deduct the expenses that you pay with PPP funds. So we're still waiting on guidance for that as far as the IRS is going to treat the expenses. So again, I know I just keep repeating it, but you cannot have enough documentation. With this being such a new program and coming out so quickly, we're all just, taking in as much information as we can and passing that along. So that's kind of what I had prepared for the PPP. I know Jamie's going to have a lot of good information for you as far as the application process goes. So Jamie?
Sure. So obviously, Heidi and Amy had a great deal to share with us about the ins and outs of the documentation. The application is a standard format that's available online at treasury.gov, or you can go to sba.gov to find that application. Certainly, any lender with whom you have a relationship can provide you with that application as well. It's a standard form, and it's going to ask you for typical application information, how you're applying. Is it in your personal name, doing business as? Is it through an LLC? I do assume many of you out there are self-employed or independent contractors who receive a 1099 and then file with a Schedule C. So the interim final rule guidance that came out on April 14th actually made very clear to us what you as an independent contractor or self-employed individual would need to submit. So I'd like to just be real specific about that, because we've talked around it, but since we think we have additional funding coming as early as tomorrow, maybe even very late tonight, early morning Friday, let's make sure that you all know as a self-employed individual what we'd need. So the 2019 Schedule C of your personal Form 1040, if you file through a Schedule C, you will need that for 2019. You may say, what if I haven't filed my taxes? My taxes are on an automatic extension. Well, that's fine. But in the interim final rule, it clearly states that that form must be prepared. So if you typically have an accountant assist you in that process, I'd reach out to them and see if they're able to fit you in for the preparation of that 2019 Form Schedule C. Ladies, I think you'd probably agree it should be filled out as it will be filed, even though it may not yet be filed. It would be very important for that to be an accurate representation of what's later submitted to the IRS. Though if you have no employees, they're going to take your line 31 net income and divide it by 12. You're going to do that on the application and use that as your monthly average payroll. If you do have any health insurance premiums paid through your Schedule C that you're entitled to deduct expenses for, or any SEP contributions that flow through the Schedule C, you may be able to add those on top of that monthly average, but you must have been entitled to claim it on your Schedule C. Again, reach out to your CPAs, bookkeepers for any assistance on whether you were entitled. That monthly average is taken times 2.5, and that's the maximum loan amount that's available. The 8/52 piece is very important that Amy went over. What that means, as I interpret it, is that while you are able to apply for 2.5 times a monthly average, which would be equivalent to roughly 10 or 11 weeks, they are saying that as a self-employed individual, your forgiveness will be limited to 850 seconds of net profit, 8 weeks worth. So if you do choose to take the maximum loan amount based on a 10 to 11 week figure, my present understanding of the forgiveness guidance is that you would not be eligible for forgiveness beyond that 850 seconds. Is that fair, Amy, Heidi?
We were actually
believe
just
so.
discussing that this morning.
Yeah, and the reason behind that is in the ruling, it states that typically Schedule C filers have lower overhead than a business entity would have. And so this was their way of making it fair between the two different entity types.
Right. So if you are a Schedule C filer who also has employees, you may have a wage line item. You'll also need to submit your IRS Form 940 or 941 tax reports to support that payroll information. You can include that as well. Another piece is proving that you were in business on or around February 15th, 2020. I've worked with some realtor clients already, and the sorts of things they've provided. If they have a business checking account with activity around that time, great. Maybe they had a listing, maybe they had checks received, commission checks received on or around that time, or checks paid to their brokerage house. Those all seem to be reasonable ways to prove you were in business on or around February 15th, 2020. And in addition, each individual bank's going to have different things they may need depending upon their relationship with you. If you apply at a bank who has never had an account with you, you're going to need to provide what's known as beneficial ownership information. If you're self-employed, that's just you. But if you have an LLC and it's owned 50-50 by you and a partner, we're going to need socials, dates of birth, driver's licenses, addresses, occupation for those individuals to define. This is really not your typical loan where credit elsewhere is considered. But if a bank has never had a relationship with you, they may ask you to submit a complete tax return, or for your business, they may ask for your business profit and loss or a tax return. Those things will vary per financial institution as they look to best serve their customers and their community. In terms of forgiveness documentation, Amy, I think you really hit it on the head. I would just caution that while we do believe forgiveness to be a very real opportunity for most applicants, so long as they use the funds appropriately and document and submit that information to the bank, that is an evolving thing. And so just keep your ears peeled for additional guidance, and certainly whichever financial institution you apply with should keep you posted on that guidance as it manifests itself through the SBA and the Treasury. So I think another thought that I would have is, how can you be ready? What do you need, and how can you best guarantee that your application is presented to a bank in a complete form and in a form that is easy to process? So again, be mindful of what that specific financial institution is asking for. Don't just drop the application from treasury.gov at a branch and assume that you're good. They've probably got a checklist of items they will also ask you to provide. So submit all of those items together as much as possible. Don't leave something out. When we say we need a 2019 Schedule C, we mean it. Even if you have not filed it, don't give me 2018. Give me the 2019 so I can put you straight to the priority queue ready to process. Banks will be experiencing high volume. Again, we anticipate with this next round of funding, and they will do their very best to serve their communities. I know we have at Central Bank of Boone County. But the easier you can make it to take that file straight into the processing queue, the better, because the quality control process sometimes makes it so that we need to reach back out to you and clarify some things, and that slows things down. So do your best to determine what is needed on the front end and submit it. A local banking relationship really does matter. I think if you have someone that you already have a relationship with, that's where you start. Some financial institutions have taken different approaches as to whether or not they are interested in providing the Paycheck Protection Program loans to all customers or to any businesses in their community. So you'll get a sense quickly, but I think it makes sense to start where you already bank. And then other than that, you've got fantastic partners in your CPAs and attorneys if you're needing help interpreting anything, and bankers are always happy to help as well.
Yeah, I think one thing to keep in mind is if you, your application is not approved, or if the funding goes as fast as they're anticipating, there are other options. If you don't get PPP funds, there are other credits that Heidi talked about that can help you, and deferment of payroll taxes. So there are other programs out there. So if you don't get your PPP funds, don't give up hope. You can reach out to your CPA, your tax advisor, or even your payroll processor and ask them, what options do you have? Okay, I think that was all we had for this session.
All right, well, thank you so much. That was really great information. We've all heard so much about these programs, but the expertise that you were each able to give us in helping us fill out our applications or doing our file retention, it's been great information. Heidi, Amy, and Jamie, we really can't thank you enough for joining us today. We really appreciate your time.
And now for our final speaker today. We are so fortunate to have Tom Sullivan joining us from Washington, D.C. Tom is Vice President of Small Business Policy at the U.S. Chamber of Commerce. His focus is on harnessing the views of small businesses, and he translates that grassroots power into federal policies that bolster free enterprise and reward entrepreneurship. Tom served under President George W. Bush as the highest-ranking government official charged with exclusively advocating the views and needs of small business before government agencies and Congress. His job was Chief Counsel for Advocacy at the U.S. Small Business Administration, where he was directly involved in more than 100 regulatory and legislative matters. He testified frequently before congressional committees, and he was a spokesman on economic conditions and entrepreneurship. Wow, what a resume, Tom. We are so fortunate to have Tom here with us today. Tom, thank you for being here, and the floor is yours.
Well, thank you. Thank you very much. And I learned a great deal from Heidi, Jamie, and Gary. Thank you for that. And I'm not going to redo their presentation because they did such a great job. I'll just add a couple of late breaking things. So as you all had mentioned, Congress is right now debating restoring funding for both SBA disaster loan programs and the PPP loans that the last panel did a really good job of explaining. There's one thing that happened this afternoon that I do want to make sure folks know about. Treasury and SBA added a necessity requirement for these loans. Some of your realtors may have seen, and they legitimately may have been upset that some larger businesses were able to access these PPP loans. I think the explanation for that is when you create a loan program that does more loans in 14 days than what the agency does in 14 years, you're not going to get it completely right. And so at the U.S. Chamber of Commerce, where we represent 3 million businesses, about 96% of them have fewer than 100 employees. 75% have fewer than 10 employees. We heard from a lot of small businesses that speed is much more important than anything else. Like they need cash now. And so when Congress and SBA and Treasury rushed this new loan program through, I think they really were, I think there were some unintended consequences. And so by adding the necessity requirement just this afternoon, we're very hopeful that minimize some of those unintended consequences. So there's some other good news as well. We know that more and more small businesses who are in a desperate situation don't necessarily have their banker or lender on speed dial. And we've been concerned for a while about what about those small business owners who have been fiscally very conservative and have never had to take out a loan. And so they don't necessarily have that relationship with a banker or a lender that everybody does. And so we just got word late last night that a series of non-bank small businesses small business lenders, sorry, who specialize in lower dollar loans are going to be lending as soon as that lending window opens up. As the previous panel had said, could be late tonight, could be early tomorrow morning. Some of our members who are in that category are Square, QuickBooks from Intuit, Cabbage, and On Deck. So if any of your realtors who are trying to get access to PPP loans, if they use QuickBooks, which has been offering some working capital loans for about a year and a half, now would be the time for them to look within their QuickBooks system to see how to access the PPP loans. So I think that this will help spread some of that, those billions of dollars out there. And then as soon as that money is exhausted at the U.S. Chamber, we're going to be pivoting into looking at how do we work with the business community? And certainly we want to work with the realtors in Missouri and in other states. What does it look like when we return to work? There's a ton of liability issues, employee-employer issues, that are going to make our work life different. And as the largest business organization in the United States, we feel a responsibility to try to take lessons from Missouri, lessons from Texas, lessons from Florida, and see how we can all kind of use those lessons. All of those states and counties will be opening up in different ways so that realtors, other small businesses will have an idea of what's working. And perhaps as that reopening of our economy is going on, we make fewer and fewer mistakes learning from the different experiences from small businesses around the country. I do want to highlight one website that we want to be helpful to your members, to your realtors. We've been running a small business digital platform for about 19 months. Getting all the kinks out. And this digital platform now has content that is specifically designed for small business owners to learn and to take tools and tips away. It's uschamber.com/CO. Now, it's not, that CO has nothing to do with coronavirus. But it's just a coincidence. But again, the URL for this small business digital platform is uschamber.com/CO. And this platform is purely for small business owners. Anyone who goes on that platform, we are hoping that they take away tools and tips that will help them succeed as a small business owner. We are seeing web traffic like we have never even imagined, which is, I think, a positive thing. The need and desperation for information is at an all-time high, and we are trying to live up to that demand. And so I'm hoping that that information be helpful to the Missouri realtors. And if it's not as helpful as it can be, John Seabree and I are old dear friends. And he has a direct line into me, and if we can make it and tailor it in any way that would be even more helpful for your membership, then he can just let me know, and we'll do whatever we can to make it more helpful.
Wow, Tom. Thank you so much. That was so informative, and it means so much to all of us that you could take time out of your very busy schedule to join us, and also to address what you're hearing from small businessmen and women from around the country. Let's highlight a few more responses from the survey, and we will post the full results to you on Common Ground. Jennifer, how about you covering question 7 from the residential survey?
Sure, thanks, Bobby. If you lost a deal, how confident are you that the listing will come back on the market or the buyer will purchase another home? The blue bar really takes the lead here. There is so much uncertainty out there amongst our members that over 60% just really don't know what to think. I suppose the good news is that there's confidence that buyers will come back much more than there's confidence that they won't.
It's a good point. Thanks, Jennifer. My last question will be question 6 from the commercial survey. Have you lost or had a transaction significantly impacted due to the virus? According to the Green Bar, over 67% of our commercial members who responded to this survey have lost or had a transaction significantly impacted by COVID-19. That's a huge number, you guys. I know for speaking for all of us in praying for better days, the fact that the U.S. Department of Homeland Security deemed residential and commercial real estate as an essential service has certainly helped, or these numbers would be much worse. With that, thank you for joining us this afternoon. As always, we want to keep this conversation going. There are so many great responses to the open-ended questions on our survey, and as I mentioned before, we're going to post the full survey results to the landing very soon. I've been asked to remind you that we have a modified version of the Robert W. Borgman RPAC auction going on right now. It opened yesterday and it closes tomorrow at noon. If you've not already been online and bidding, why not get on there, start bidding. You can find the link at our homepage of the conference website, which is MissouriRealtor.org/ABC, or just text Mo Realtor Party to 76278. That's on your screen. Don't listen to me, watch the screen. It has been such a pleasure to be with all of you today. Thank you to the Missouri Realtors leadership team who have been so available and willing to help with all of us in every possible way during this challenging time. I'd also like to thank my Vice Chair, Jennifer Piglowski, and our staff liaison, the uncomparable John Seabury. We love you, and all of our Missouri Realtor staff who are behind the scenes and working so hard right now. Again, to all of today's speakers, we appreciate you so very much. Thank you for being here. And I cannot wait until we can all be together in September. Fingers crossed, it's gonna happen. Have a wonderful evening, and I hope to see you at the Appy Hour that follows this forum. I believe it's starting at 4 o'clock, so you've got a few minutes to go get your Kestorito made, and we will see you there. Bye, guys.